Okay, so that is just the phases of how the banana zone tends to play out. You tend to get the first spurt. Bitcoin went from 50,000 to 100,000. It then corrects a bit. Everyone freaks out. I mean, it's ridiculous. I mean, it's literally ridiculous. The people freaking out from a correction like this. And then you usually get the alt season part. And that's when any moron can make money, including myself, in anything that you hold. And that is the alt season. That usually, in full throttle goes through till, let's say, April. And then it tends to get more selective in the final phase where they concentrate on the key themes.
Everyone seems to be panicking with the market showing red across the charts. The crypto market overall is down 1.2% in the past 24 hours, as it continues the downward slide over the past week. The questions of whether the top is in, or if we are experiencing a typical bull market pullback before a rip to the upside, has been the main question across the crypto community. In an interview on Real Vision with Wrecked Guy co-founders Ovi Farouk and Michael Anderson, macro analyst and CEO of Real Vision, Raoul gave his take on what he sees coming in the crypto market. Raoul has been preaching the banana zone for quite some time now, and his stance hasn't changed. Due to the macro factors with the dollar, liquidity in the market, and the fact that he believes the first crypto-friendly president is soon to be inaugurated, Raoul believes there's still a long leg of bullish action running into April of 2025, and then a shakeout for some of the weaker coins. Raoul expressed that there's nothing to be afraid of, even though the market is showing fear. Let's listen to what Raoul has to say.
So everybody's asking about, I put a big thread about it yesterday. Has the market topped? What's going on? Is that M2 chart going to play out? Are we all fucked? Is it going down to 75,000? Yada, 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 yada. I mean, it's all day. And then it's like, oh my God, the Fed aren't going to cut rates. That's the end of the market. They can't, just so much noise. What I urge people, I wrote it, I think, in response to you, Ovi, is 2017-16 was a near identical setup. So the market has been following the pattern. But outside of that, Trump got elected. Everyone went, oh shit, tariffs. They're inflationary. The dollar screamed higher. Rates went higher. And then what happened was Trump came in and said, we need to get a lower dollar. Scott Bessent's already talked about it. The other guys coming in as the Economic Council guys already talked about the dollar being a problem. So I think they're using the dollar as the stick and will then offer it as the carrot to the Chinese, the Canadians, the Europeans, and everybody else, which is, if you agree a trade deal with us, we will help lower the dollar. The dollar is a function of liquidity, which is why rates are so bad as well. There's actually not enough liquidity in the system. And I think that's sort of somewhat purposeful overall. But if we go back to 2017 and we had that setup of the dollar turning over and then rates actually came down for the rest of the year. The other thing, the Fed were raising rates all of 2017 and crypto went up.
Yeah.
USM2 went down. So all of the things you would be looking for, they were all in reverse. So what really was happening in 2017 was China had been beaten up by the strong dollar in 2015, 2016, and their economy was super slow. China increased the balance sheet and the Fed lowered the dollar. The Europeans did some QE and the UK did some QE. We got a near identical setup. The market is over extrapolating tariffs and fears. Whatever rates do is irrelevant. It's what global money supply does. Not global money supply, global liquidity does going forwards. We know back in 2017, the Treasury drained the TGA for the same reason. I mean, it's like literally everything is an exact rerun of what happened. So, look, I don't expect an exact rerun this time, but probabilistically speaking, there's nothing to be concerned over. Now, when we looked at that big M2 drop last time around, and this time around, it leads by about 12 weeks. So last time around, we had an identical M2 drop. You can see it. I don't know if you can share that chart you're looking at now after that one. This one shows the near identical pattern in M2 back then versus now. What happened was the dollar weakened, global M2 went up. What also happened is the NASDAQ had a similar correction, crypto very similar. And what crypto did was didn't follow M2 going forwards because it starts to decouple as the bull market takes place. And what happened was it did an 8-day correction and did negative 35%. This time it feels like it's slightly more sideways. Whether it goes a bit lower or not doesn't really matter. But the point being, you're looking for the bottom as opposed to a sharp acceleration from here. But either way, it's over pretty quickly. And then what happened last time around is the moment Bitcoin hit a low, alts took off. And so that's my general thesis on all of this right now. This is pretty much playing out exactly as I've been expecting it to play out. And whether that's in liquidity terms, because it's a rerun, because we've got this debt cycle, it's the same bloody thing, right? So that's my overall view. It's like it's all fine.
We just heard Raoul discuss the fear in the market and where he believes it is going. In the next part of the interview, Raoul discusses the current state of the business cycle and how he believes that is another indicator as to why crypto has not seen the top of the market. Let's listen to what Raoul has to say.
It normally decouples at this point in the cycle anyway, because it starts forward looking. Now, liquidity is actually financial conditions drive liquidity. And so crypto's been following financial conditions. So it suggests that liquidity comes back. So, but then in the full bull market phase, it normally does decouple. So I don't think it's doing anything unusual whatsoever. And, we're now a $3 trillion asset. You need more institutions in to drive the asset higher anyway. People forget that. Like the institutions here, it's amazing. Well, it has to be if you want 100% rise. You need larger pools of capital now because it's a much bigger market. So, and over time, I think, yes, we get product market fit. I don't think AI is the product market fit currently. I think that's all narrative based versus the reality of where it is. But look, overall, the trends are all right. And we haven't even got the bloody administration in yet. We haven't got the clarity that we're all waiting for. And everyone's at kind of a max fear right now. It's crazy. But that's a good setup, right? It's just a good setup for the year. The other thing that's interesting about this cycle is the best indicator for almost everything in the world is the ISM survey, the business cycle. The ISM is still not above 50.
Yeah.
And, back in 2017, it had come 50, but by about Feb, March, it really started accelerating. So we haven't even had a business cycle yet. Now, what's interesting is the best indicator of when you should be looking for a top in crypto is when the ISM is peaking, because that's when liquidity starts changing. Now, that happened really early in 2021 because of the pandemic. So it happened in March 2021. 2017 didn't happen until the end of the year. I think because ISM has been so low this year, there's a chance that this thing doesn't peak until Q1 2026. So it's a slightly different cycle, but we're just not even in the ballpark of looking for a larger top. So I think the business cycle is still not above 50. It will go above 50. That means corporate earnings go up, and then we get rid of that bifurcation between the tech stocks, which are cash flow driven, zero debt, and the regular economy. That gap closes because earnings grow. Earnings grow, household earnings grow. Household earnings grow, investment goes into markets. So that virtuous cycle is all the same cycle across all assets. The next phase of this, we will see the cyclical plays, the commodity plays, all starting to rally as the global economy starts to recover. So that's all to come. The ISM is still below 50.
SIM swap fraud is sweeping the globe, and your mobile security is at risk. Switch to Ifani and lock out SIM swap fraud and get the most elite mobile protection in the world. Ifani guarantees 100% protection from SIM swaps backed by a $5 million insurance policy. Stay secure with reliable coverage, free international roaming, and unlimited data. Trust Ifani to keep your communications and assets secure. Get military-grade protection, 24/7 concierge service, and a hassle-free upgrade. Click the link below for $150 off. Thanks for watching. Help support this channel and receive exclusive offers from one of our partners located in the description. We'll see you on the next one.